Welcome. We are doing this after a long time. Sorry for that. There are some requests for doing markets kya lagta hai Elliott Waves analysis. So here I am in front of you trying to do the analysis now. So let's go to the very long time frame. Nifty. If you look at it, this 55-day time frame. And here, if you look at it, we started the first wave with the start of Nifty around 94, 95, whenever, and then till 2007 you had wave one, which got corrected, deep corrected, and then 2009 onwards we have started the wave three. This wave three is made up of the lines like this. You can look at the blue ones, and we had the first wave which finished at the beginning of the COVID 2020 somewhere, and then we had the COVID fall, which was nothing but the wave two, and past that we have seen a very ferocious one-sided move, which is wave three, characteristic of wave three. You can't deny that wave threes are usually strongest and boldest, most aggressive. Now, if I need to look at the target for this wave 3, there is Fibonacci that I am going to use, and I'm not drawing it with the perfect scale because we will need to look at multiple things before we could match it. So 1.6 comes to around 24,400. 2.6 comes to around 34,600. So I would be expecting a number somewhere between these two. I would not be surprised if it goes to 34,500 odd levels here. Okay, so with those two levels in mind, let us now drill down where exactly the markets look like. And for that, I am going to go down to a detailed level. So 13-day is one candle. And if I look at the 13-day, this is where our wave 2 got finished in pre-COVID or post-COVID times. And from there, let me just take this blue line to gray, and we are now looking at this black. Okay, let me just make this a little bolder. 3 points, I think it's okay, but 4 points. Okay, and here I see an extended fifth wave. Only time will tell whether I am right or wrong. But at this point in time, I see this as an extended fifth wave. So we had a one, and then it quickly corrected, and then post that we had a major rally, which was a wave three. Then we had a very nice ABC wave four, and you would also see awesome oscillator coming down to zero, and then from there we started a very nice wave five. Now let's start looking at wave 5 itself. Let me make this less bold. So it was 3 points, which is okay. And then we are going to weekly time frame. So if I go to the weekly time frame, this is where I will be able to see the nice picture. And for that, I want you to look at the blue line. Here we had a very nice 1 2 3 4 5, which was wave 1, got corrected deep, wave 2, and then beyond that wave 2 a third wave has started. So if you look at this major up move, this was third or fifth, which have shown a very nice aggressive nature. And that is exactly how I believe the next level of detail unfolds. And I'm going to make this black is okay. Black is okay, but we will make it red. That might look very nice. Red is not color of fall to me. Red is color of reproduction. Anyway, that's a different story. So we had a very nice 1, we had a very nice 2, we had a very nice 3, and then we are on the fourth wave right now. And on awesome oscillator, we have already come down to 0 in weekly charts. So we have to see how deep this correction would look like, and we are going to look at that. But we are on we just finished third of fifth of third of third of third, right? And with that, let's zoom in into the current fall. Hmm? And now we are in the fourth wave. So that's the fourth wave started somewhere here. And let's go to daily. Daily would help us understand the latest fourth wave. And if I have a lot of points before this, detailed, but I don't think they are going to be making too much of a sense. I keep changing this every now and then, but I don't know why this guy doesn't update it. Okay, never mind. So this is where the first wave has finished. And this, oops, sorry, give me 1 second. And I'm doing this full recording without breaking, so that you are able to see everything perfect. So here, now we are looking at the fall, which is most likely an ABC kind of a fall. So we had the first A, which shown us a very nice 1 2 3 4 5. There were 1 2 3 4 5 within that also. I'm going to skip this. Beyond that, we have had a B, and now there is a good discussion that someone may have whether this is where the B ended up or B is yet to be ending. It doesn't look like B is going to be ending, especially after looking at yesterday's this Friday fall. So here, if you evaluate how deep this B went on, we'll just use the Fibonacci here from here until here, and go in. I don't need these. I need, oh, this too deep. This will be near about 0.5 in my opinion. Okay, this was not 0.5. It actually corrected around, oh, it corrected exactly 0.5. So it came down to zero point 0.5, and from zero point 0.5, so B was 0.5, and then we have started the wave C. Now, how deep the wave C can go? Let me, oops, sorry, Control Z, and this comes here, zero point 0.5. And how deep the wave C can go, there are two ways to measure it. We can look at wave 4 compared to wave 3, or we can also look at A B is equal to, the wave A is equal to wave C. It's harmonics where AB is equal to BC, but let's not get confused. Let's stick to simple Elliott waves. And here, some people think the Elliott waves is difficult. I find Elliott waves to be extremely simple. That's a personal choice. With experience, you get to understand a lot of things about Elliott waves. And when it starts working perfectly for you, you start enjoying it. So this is where most likely your ABC might end. That's probably the A is equal to C kind of ABC. So we are looking at a level around 22,000 for this fall. And if this is actually C, wave C is always a killer wave. So we are able to see the characteristic of killer wave. But also remember that we are in wave 4. So wave 4 characteristic is confusion. It's always denial. People, there are people who have been in wave 3 who thought that markets are supposed to go higher and higher and higher, and they throw the evaluations out of the window, and they say that I don't need to see any valuation. Markets can keep going without valuation. And wave 4 is when the confusion starts coming in for that particular valuation. So if I have to look at the wave on a weekly basis and look at this wave 3, let me zoom in. I hope I'm not confusing you people. If you get confused, please do ask me questions. I'll be more than happy. I would prefer the questions coming on my WhatsApp. Okay, so here this is coinciding with the zero point 0.6 correction on of the wave 3. So either you would see 50% of wave 3. Wave 4s usually are not so deep, so I would rather be targeting 22,500 rather than 22. But let's see. When we get into the details, we will be able to figure out. We just have these two different levels, which are definitely possible levels to achieve for the markets before they start the next up move. So let's go in a little bit intraday, since we are not able to conclusively say which levels may happen. And if you look at it, this is where your wave 3 start, wave C started. And if you look at it, this was a wave a wave 1. Sorry for that. So this is your wave 1. It got corrected perfect, and then you are in wave 3. You will be wave 4 and wave 5, right? So now if I try to identify where the wave 3 might end, I'm just going to be using fib extension. And in fib extension, I want to look at 1.6 and 2.6. In shorter time frame, usually you don't see 4. So this is where the most likely 2.6 may end. So between these two levels it might end, and then you may have a wave 4 and then a wave 5. So 22,500 looks to be more realistic to me than 22,000. But if you think that this is a major correction, then don't think that way. Especially a very important point I'm going to be making. Now we are going to be finishing wave 4. After wave 4, we are going to be getting into wave 5. Wave 5 usually is a sluggish wave, usually is a slow wave. So even if this is going to get corrected to 22,000, which is little bit too much of forward looking, or 22,500. If I look at 22,500, then I am looking at 1.27 times this to be a wave 5. Why 1.27 times? Because we are already in an extended wave 5th. So I don't think there would be another extension of this. So this is where markets may actually end up going to. So from 22,500, they may go up to 27,500, and then they are going to be correcting again to 22,500 odd levels. So for a very long time, you are going to be seeing choppy markets. You are going to be seeing markets that will correct often, especially when you see these levels coming in, 27,500 odd levels. We will see a lot of confusion in the market. This looks to be, if I look at the same size of wave 3 or wave 1, then we are talking about this was from March of 23 until the July of 23, 4 months. So if this guy gets over here, Feb, March, April, May, June, July, so it would probably be somewhere here. July, yeah. So this is going to be coming around somewhere here. So after that, you are again going to be seeing another correction. So this is going to be one of the very nice times for option sellers, where there is a lot of confusion. IV is going to be very high, and you are going to get lots of opportunities selling options. I'm not going to be talking about buying options, but I recommend selling options because they give you much better probability of win. That's about it. If you still think there is some discussion to be done, if you think this does not look to be the right wave count, feel free. I'm going to be putting in a link to my WhatsApp channel if you are interested in connecting with me. So till then, have a great time and nice trading. Long-term investors, what they should be doing, in my opinion, they should wait for this fall to happen. Never catch the falling knife. Let the markets to stabilize, and only when you start seeing higher highs and higher lows, you start investing into the market. But keep in mind that this time you are not going to be seeing a rally like this, which was wave 3, third of third, third of fifth of third. You are going to be looking at fifth of third. So it's going to be a little slower. And then beyond that, there is going to be another correction. So keep in mind that the time to earn money from stock market is not going to be exactly same as the recent past. Okay, so have a great time, and please give me feedback if you think this does not look correct, or something needs to improve. Cheers, bye.